Have you ever wondered how credit cards really work? What are the benefits and risks of using them? In this video, we're going to talk about 10 topics that you must need to know about the credit cards. The first one, Introduction to credit cards. What is a credit card? A credit card is a payment card issued to users that enables the cardholder to pay for goods and services based on the cardholder's promise to pay for them later. Essentially, it's a short-term loan from a financial institution. The user sets a credit limit, which is the maximum amount the card holder can borrow. How does it differ from a debit card? A debit card draws funds directly from the cardholder's checking account. When you use a debit card, the money is immediately deducted. A credit card, on the other hand, allows you to borrow money, which you must repay later, often with interest very high. Debit cards use your own money and credit cards use borrowed money. Common credit cards providers. Visa and MasterCard are payment networks. They process transactions but don't directly issue cards. Banks and credit unions issue cards that use these networks. American Express and Discovery are both payment networks and card issuers. Each network has a different acceptance rates and merchants, and they may offer unique perks and benefits. The second point, how credit card works. Credit limits and available credit. The credit limit is the maximum amount a lender will allow you to borrow. Available credit is the difference between your credit and your current balance. For example, if you have 5,000 limit and a 1,000 balance, your available credit is 4,000. Interest rates and APR, annual percentage rate. The interest rate is the cost of borrowing money, expressed as a percentage. The APR is the annualized cost of credit, including fees and interest. It reflects the true cost of borrowing money a year. APRs can be fixed or variable. Variable rates fluctuate with market interest rates. Minimum payments and how they affect debt. The minimum payments is a small amount you must pay each billing cycle. Paying only the minimum can lead you to prolonged debt accumulation because most of your payment goes toward interest, leaving very little to reduce the principal balance. Billing cycles and due dates. A billing cycle is the period between two billing statements and typically around 30 days. The due date is the date by which you must make a payment to avoid late fees and interest charges. It's crucial to know your billing cycle and due date to manage your payment effectively. The third point, benefits of using credit cards. Convenience and security. Credit cards offer convenient payments, especially for online purchase and large transactions. They also provide security features like fraud protection and dispute resolution, building credit history and credit score. Responsible credit card use, such as monthly timely payments, help build a positive credit history, which is essential for obtaining loans, mortgages, and other forms of credit. Rewards, cashback, and travel points. Many credit cards offer rewards programs such as cashback, travel points, or discounts. These incentives can provide significant value if used wisely. Emergency funds when cash is not available. Credit cards can serve as a safety net in emergencies, providing access to funds when immediate cash is not available. However, these should be used cautiously as it adds to the debt that will need to be repaid. The fourth point, risk and dangers of credit cards. High interest debt and how it accumulates. Credit cards interest rates are often high, and if you carry a balance interest accrues daily, this can lead to a debt spiral, where interest compounds and makes it increasingly difficult to pay off the debt. Late fees and penalties. Late payments can result in late fees and penalties, which can be substantial, and these fees can further increase your debt and negatively impact your credit score. The danger of only paying the minimum balance. Paying only the minimum balance extends the repayment period and significantly increases the total interest paid. This can trap you in a cycle of debt. The impact of missed payments on credit scores. Missed payments are reported to credit bureaus and can severely damage your credit score, making it harder to obtain future credit. Identity theft and fraud. Credit cards are susceptible to fraud and identity theft. Unauthorized charge can lead to financial losses and damage your credit score.
Point 5 is understanding credit score. What is a credit score and why does it matter? A credit score is a numerical representation of your credit worthiness. Lender uses to assess the risk of lending your money. A good credit score can help you to secure lower interest rates and better loan terms. How credit card usage affects credit score? Responsible credit card use, such as timely payments and low credit utilization, positively impact your credit score. Conversely, missed payments and high utilizations negatively affect it. The factors that influence a credit score are payment history, credit utilization, length of credit history, new credit, and credit needs. Payment history, 35%. Timely payments are the most significant factor. Credit utilizations, 30%. The amount of credit used relative to your credit limit. Length of credit history, 15%. The longer your credit history, the better. New credit, 10%. Opening multiple new accounts in a short period can lower your score. Credit mix, 10%. Having a mix of different credit types, like credit cards, loans, etc., can improve your score. The point 6 is how to use credit card responsibly. Paying the full balance each month. Paying your balance in full avoids interest charges and keep your debt manageable. Keeping credit card utilization low, below 3%. Maintaining a low credit utilization ratio, ideally below 3%, demonstrates responsible credit use and improves your credit score. Avoiding impulsive purchases. Use credit score for planned purchases and avoid impulse buys to prevent overspending. Setting up automatic payments or reminders. Automatic payments or reminders help assure timely payments and avoid late fees. Understanding terms and conditions before applying. Carefully review the terms and conditions, including interest rates, fees, and reward programs, before applying for a credit card. Point 7 is comparing credit card offers. Interest rates and fees, annual fees, late fees, forgetting transaction fees. Compare interest rates and fees to find the most cost-effective card. Annual fees, late fees, and forgetting transaction fees can significantly impact the overall cost. Rewards programs and hidden costs. Evaluate rewards programs against potential hidden costs such as high interest rates or annual fees. Ensure the rewards override the costs. Student credit card and regular credit card. Student credit cards often have lower credit limits and are designed for those with limited credit history. Regular credit cards offer more features and higher limits. Secure and unsecure credit card. Secure credit card require a security report with service of your credit card limit. They are suitable for those with poor no credit history. Unsecured credit cards do not require a deposit and are based on your credit worthiness.
Point 8. What to do if you get into credit card debt? Creating a repayment plan. Develop a budget and repayment plan to systematically pay off your debt. Prioritize a high interest debt. Now, there is two methods: the snowball method and the avalanche paying method of debt. Now, the snowball method. Focus on paying off the smallest debt first, regardless of interest rate, for quick wins. Avalanche method. Focus on paying off one of the highest interest debt first to minimize the total interest paid. Now, negotiating lower interest rates or balance transfers. Contact your credit card issuer or negotiate a lower interest rate or consider a balance transfer to a card with a lower introductory rate. Now, seeking financial advice. Consult a financial advisor or a credit counselor for personalized guidance and support. Now, this is point 9. Real life stages and case studies. This is optional, but I'm telling because it's important. Example number 1. Example of someone using a credit card wisely. A person who uses a cashback credit card for everyday purchases plan the balance in full each month and earns significant cashback rewards. This helps to build a good credit score. Now the example number 2, someone falling into the credit card debt and how they recovered. Now this is stage 2 for like the avalanche method. Someone only pays a minimum balance and their debt spirals due to highest interest. They recovered by creating a budget, using the avalanche method, and negotiating a lower interest rate. Now this is point 10. It's so small, but it's a recap of important points. Now this is the point. Summarizes the key aspects of a credit card usage, included benefits, risks, credit card scores, and to have a credit card you need to be so responsible. You need to give a responsible usage. Thank you.